بسم الله الرحمن الرحيم. My dear students of fourth year accounting, the subject of process costing, the subject of cost accounting system, lecture about process costing. As we explained last lecture on the previous Monday, we began process cost accounting, and I told you that I have two main costing systems. The first one is called process costing system. The second one is job order costing system. The job order may be short-term and may be long-term. When I began explaining the process costing system, I told you that you have to prepare four main reports or three main reports and an account, or two main reports and a sheet with a ledger account. What are the two main reports? The equivalent production report, or as we told you, equivalent units production report, then average cost per unit report, then the process cost sheet or cost report, then the process ledger account. We told you that suppose that a certain factory wants to begin in producing 5,000 units. He is in the first beginning and he didn't produce anything before. He has no work in process at beginning till now. The 5,000 units, 4,000 are completed. So from the point of view of all items of cost, either direct material, wages, that is direct labor, or manufacturing overhead, these units as completed will be considered 4,000. The remaining 1,000 is considered work in process, so it didn't complete it yet. That's why we have to consider it as work in progress or work in process. And completion rate should be used to arrive to the equivalent units of the work in process, either regarding direct material, direct labor, or indirect manufacturing cost. Regarding direct material, if he didn't mention the level of completion, it is 100% directly. But the other two items of cost, direct labor cost and indirect manufacturing cost, I have to tell you the completion rate for each. After getting the equivalent units of production report, you have to take the costs, the value of direct material cost, direct labor cost, then indirect manufacturing cost, to be divided by the equivalent units under each to get the average cost per unit. Then the report of the process costing should include input costs and output costs. The input costs, the items of cost used during the period and their total. Then the output cost is the completed units cost plus the work in process cost. Both should be equal, I mean the input cost and the output cost. The input cost appears in the debit side of the process ledger account, and the output cost appears in the credit side of the same account. After that, I told you that all what's produced in process 1 is considered finished product from the process point of view, but will be transferred to the next process as raw material with its cost. At this point, we found that it was 5 minutes to 12, and we left the lecture, and we said that we will complete in the next live lecture, example 2, and so on. And I told you in the Zoom lecture, I will explain chapter 17, that is process costing, from the PowerPoint. I let it available to you on my site. Process costing chapter 17, we may not be able to complete it wholly, so we will explain about 50% of it, then we will complete in the next Zoom lecture regarding cost accounting. Process costing. Illustrating process costing. Direct materials as a cost, direct labor as a cost, indirect manufacturing costs as a cost, all appear in each department. So department A has its direct materials, direct labor, and indirect manufacturing cost. Also, department B has its direct material, direct labor, indirect manufacturing cost. When department A is finished from preparing its completed units, it transfer its completed units to department B. So both departments got the three main items of cost. Then department A, after finishing producing its finished product, I have nothing to do with the work in process. It remains in the department or the process. The finished product will be transferred to department B with its cost. With new costs that you will have to have the ending product or ending production to be put in the finished goods store. When selling these goods, it will be COGS to be compared with the revenues and so on. Now, 5 steps in process costing. Number 1, summarize the flow of physical units of output. And if you remember, I told you there is a physical flow column in the equivalent units of production report. This is the first column after the details column. Then step 2, compute output in terms of equivalent units. This means preparing the report to get the equivalent units as finished products. Step 3, compute equivalent unit cost. That is average cost per unit, as I told you. Summarize total cost to account for to get the input costs, then assign total cost to units completed and to units in ending work in process inventory. Now, physical units, that is the step 1. Physical units for assembly department or process, flow of production, work in process beginning 0, because we are in the first beginning. We have no work in process. Then we started during current period 35,000. So we started to produce 35,000. So I have no work in process at beginning, that is 0, plus 35,000 units I have to produce. I am accounting for 35,000. What about the output? He told me that completed and transferred out during current period and transferred out, so it is transferred to the next process equal 30,000. I began by 35. So as completed 30,000, so I have 5,000 in work in process. Work in process at end 5,000. He told me conversion cost 20%. You know from third year that conversion cost includes 2 items of cost, that is direct labor cost and indirect manufacturing cost. Both are 20%. So the accounted for is 35,000. So I began by 35, completed 30, work in process at end 5,000. The 5,000 conversion cost 20%. He didn't tell me what about the direct material. So direct material is 100%. Now, equivalent units of production report. I told you that we have a column here called equivalent units of production report to say that completed units 30,000 and work in process 5,000. Then I told you that we use the conversion cost separated. I mean 2 columns for conversion cost, one for direct labor cost and the second for indirect manufacturing cost. Okay? Okay. Now, please wait just a moment. Okay. I'll begin with you again. equivalent units of production report. The completed units and the transferred out to the next process, 30,000 regarding direct material, 30,000 regarding direct labor and indirect manufacturing costs, we gathered together under the conversion cost. Why we gathered both two items together? Because the conversion, the completion rate is the same, that is 20%. The ending work in process, 20% for conversion, but he didn't tell me the completion rate for direct material, so it is 5,000 for direct material, 20% of 5,000 gives 1,000 for conversion cost. Now, the current period work as a total, 35,000 for direct material, that is the equivalent units, and 31,000 for conversion cost. The next step, that is step 3, as the slides tell me now, will be for average cost per unit. So, compute equivalent unit average cost. Total production costs are, he told me, material 146,050, or the total 146,050, out of which direct material 84,050. So the remaining conversion cost 62,000. Remember again that he used conversion cost for both direct material and indirect manufacturing cost, and he gathered the two together because the completion rate is the same, 20%. Direct material, total cost 84,050. For conversion cost, that is direct labor and indirect manufacturing cost, 62,000. If divided by the equivalent units, I mean 35,000 for material, 31,000 for conversion cost, as we saw in the previous slide, when we prepared the equivalent units of production report, we get the average cost per equivalent unit 2.14 and $2. So regarding direct material, $2.04 approximately, then 40 cents approximately. For conversion cost, it's $2. Now we want to compute the cost or prepare the in cost and the out cost, like this. Step 4 and 5. Step 4, total cost to account for 146,050. That is direct material, as we told you, 84,050, and conversion cost 62,000. Both together give me 146,050. We put it in detail while we are preparing our solution in the live lecture, face-to-face lecture. To assign to this cost, I said completed and transferred out 30,000 units. If multiplied by 2.4014, it gives me the cost of material regarding the 30,000. If multiplied by the 2 as conversion cost, it gives me the conversion cost for the 30,000 units completed. The total cost is 132,043. As I told you, I am explaining as the slides of Horingren, but when solving in the lecture, we give the details, not summation like this. Work in process for ending work in process, 5,000 units. Regarding material, they are 5,000. But regarding conversion cost, 5,000 times 20%, I said 1,000. This multiplied by cost per unit for material, and this is multiplied by cost per unit, I mean completed units for conversion cost. I got the total 146,060. 146,050. This is the total cost I began with. Now, use the weighted average method of process costing. Remember with me again, we were having 5,000 units work in process at end of this process. At end of the period, this means at the beginning of the next period, the 5,000 units will be beginning work in process. So ending work in process of any period is the beginning work in process for the next period. Now, what can we do if we have beginning work in process? I didn't explain this in the lecture, but I will explain it now. Just take an idea, and when solving the example in the lecture live next Monday, I will explain it in more details. We have two main methods to be used while we have work in process at beginning. FIFO method and weighted average method. How to use weighted average method? Now, suppose that I have work in process at beginning that is 100% material, and if he didn't mention, okay, it's 100%, and 60% conversion cost. This is a new example. Don't look to the previous one, because the previous one, the ending work in process were 20%. So if we will use it here, we will say that it is 20% completed. But this is a new example. That's why I'm saying material 100%, and I may neglect this information or this datum. But conversion costs, I said 60% regarding the beginning work in process. So beginning work in process here in this example is 1,000 units. Completion rate 100% for material, 60% for conversion cost. Then units started in the process 35,000. So the total to account for is 36,000. 1,000 work in process beginning and 35,000 new units to be produced. The units transferred out is 31,000. So 36, out of which 31,000 is completed and transferred to the next process. So I have ending work in process 5,000. He told me the 5,000 is 100% material and 20% conversion cost. So the total units to begin with is 36, out of which 1,000 is beginning work in process. The total units I arrived at end, 36, 31 completed, and 5,000 ending work in process. The completion rate here is 60% at beginning regarding conversion cost. Here, conversion cost at end, 20%. When computing the equivalent units regarding ending work in process, no problem, just like the previous example. But consider here that the beginning work in process, the 1,000, has completed from the material point of view, so it needs no material to be completed. So it will be 0% regarding material. But the conversion cost is 60%. So it needs the remaining of the 100%, I mean 100% minus 60%, the non-completion rate is 40%. So regarding work in process, I consider the non-completion rate, not the completion rate. So regarding material, completion rate 100%, so the non-completion is 0%. Conversion cost is 60%, so the non-completion is 40%. Now, how to prepare our equivalent units of production report? Like this. Completed and transferred 31,000 either regarding materials or 31,000 regarding conversion cost. Ending inventory 5,000 regarding material, that is the ending with 100%, and 1,000 that is 20% for conversion cost. So the total 36,000 from the material point of view and 32,000 from the conversion cost point of view. Where is the non-completion rate you told me about? The non-completion rate is to be used under FIFO method. So under this method, nothing at all. You consider all the units are averaged together, so weighted together. So I put the 1,000 units work in process at beginning plus the 35,000 new units, and I consider them all are new units. The completed is 31,000 and the remaining is 5,000 ending work in process. Okay, I consider as if I haven't beginning work in process. I added them to the 35,000 I am preparing for this period. So the 35 plus the 1, I consider them as they all are new units. Completed 31 and the remaining 5,000. So nothing to do when we have average cost unit, no problem regarding the equivalent units of production report. But the non-completion rate I told you before, I have to use in case of FIFO method, as you will see. Now, the beginning work in process has its cost either regarding direct material or conversion cost. And there is new cost of this period, either for material and conversion cost. I have to add the material of work in process and the material of the period, and to add conversion cost of work in process and conversion cost of the new period together to get the average cost per unit, like this. I have beginning inventory cost 2,350 for material, 5,200 for conversion cost. And the current cost, the new cost of the period, 84,050, 62,000 conversion cost. So the total cost of material, 86,400, the total cost for conversion, 67,200. If divided by the equivalent units we got in the previous step, 30,000 and 32,000, these are the two figures, 36,000 regarding material, 32,000 regarding conversion cost. I will get average cost per unit 2.4 regarding material, 2.1 regarding conversion cost. Now step 4 and 5, to account for the cost of the period and the beginning work in process cost, then the completed units and the ending work in process cost as output in step 5, like this. Work in process beginning inventory, materials 2,350, conversion cost 5,200, the total 7,550. The output cost, current cost in assembly department, materials 84,000, 050, conversion cost 62. So the current cost period and the work in process cost, the total 153,600. This is step 4. What about step 5? Like this. Cost transferred out, 31,000 completed and transferred to the next process. So I'll multiply by material cost per equivalent unit and labor cost per equivalent unit to get 139,500. What about the ending inventory? That is work in process at end. I have 5,000 regarding materials, 100%, times 2.4, conversion cost 1,000 times 2.1, the total 153,600. I know well that when I explained with you, I didn't use this method. I didn't add labor costs and conversion costs together in one column, but there was details and I prepared the equivalent units of production report and the average cost in the same method I told you. And this is the best method because there is in accounting what's called disclosure. Disclosure means al-ifsah. To have everything disclosed, it is better to have column for details in the equivalent units of production report, column for physical flow, that is separated here in a certain step in Horinger slides. Then I have one item for each, one column for each item of cost. So I have direct material, I have direct labor, I have indirect manufacturing cost. The difference between the method we are explaining in the lecture face-to-face and what we are seeing now is that he separates the physical flow in a certain step instead of putting it in the equivalent units of production report. Then he also combined direct cost and indirect manufacturing, direct labor cost and indirect manufacturing cost in one item that we know that conversion cost. Why he added them together? Because the completion rate is just the same. But even if it is the same, I prefer for disclosure to put each one in a certain column. Now, there is a third difference. When calculating the cost of the finished products transferred to the next process, we separate the cost of material, the cost of direct labor cost, and the cost of indirect manufacturing cost. But here he multiplied the 31,000 by the total cost per equivalent unit, as you see here. Now, use the first in, first out FIFO method of process costing. Remember again, when we were using the weighted average method, the 1,000 unit, look again, we began with the 1,000 and the new 35, we added together as if they are new units. Then I got 31,000 completed and 5,000 ending work in process. We didn't distinguish between the beginning work in process or the units, the new units. That's why the units transferred out 31,000. Can you tell me if they are including the 1,000 beginning work in process or all are from the 35,000, the new units? You can't say. Why? Because we added 1,000 plus 35,000. Now we have 36,000 in total. The completed 31 from this and the remaining from the new units, or all are from the new units, I don't know. The 5,000 ending, are they from the 35 or part from the 35 and the remaining from 1,000? I don't know, because we are using weighted average method. We amalgamated the work in process beginning the 1,000 plus the 35,000, we got 36. The completed 31. From the 1,035, all are from 35, it doesn't matter. The ending from the 35 or part from 35 and the remaining from 1,000, it doesn't matter because we have weighted average. That's why we added the cost of the beginning work in process and the cost of the completed of the current cost. So the beginning inventory cost, material and conversion. The current cost for material and conversion. Added together, this is total material. We didn't distinguish between this and that. In the new method, that is FIFO, we have to distinguish. So it's called first in, first out. So the 1,000 work in process at beginning should be completed at first and to be transferred at first to the next process. Then I will complete the 34,000 to be completed in total 35,000. So as 35,000 are completed and transferred to the next process, the 35,000, I have to consider the first 1,000 work in process at beginning to complete them. To complete them, they are 100% material. So it needs no completion rate for material. Its non-completion rate is 0 because it is completed 100%. But regarding conversion cost, I mean direct labor and the manufacturing overhead, they are completed, as he told me in the example, 60%. So the remaining non-completion rate is 40% that we will use to complete these units. Look with me. Quantity schedule, completed and transferred from beginning, 0 material. Why? Because the 1,000 multiplied by 0, because it is completed from the previous period, 100%. So it needs no material. So 1,000 times 0 gives 0. Now, this beginning work in process is completed 60% from conversion cost point of view. That's why it is needing uncompleted or uncompletion rate that is 100% minus 60, 40% only. 1,000 times 40% gives 400. For the started and completed, 30,000 completed from this period. So the ending inventory, 5,000, 100% from the material point of view and the 20% from conversion cost. So the ending work in process, we deal with it just like the average cost, or if we haven't the beginning work in process. Completion rate and finished. But the problem now in 2 points. Point number 1, or 3 points. Point number 1, we deal with work in process in FIFO separately using non-completion rate. Then we separate cost of beginning inventory from cost of during from the current cost of the period. Then when calculating the cost of the 31,000 units that is completed and transferred to the next process, we have to begin by the cost of the 1,000 unit work in process and complete it to be completed units from the cost point of view, then the cost of the remaining 30,000 like this. Current cost, 84,050, 62,000. That is material and conversion cost. Equivalent units, 35,000, 31,400. Where is the cost of the beginning inventory? We didn't add to the current cost of the current period. But in the average cost, average unit, the weighted average method, we added both together. No, here we calculate the average cost per unit from the current cost only. Then we will calculate the finished products transferred to the next period, to the next process through adding the cost of beginning, as you will see now. So current cost of the period divided by equivalent units, it gives cost per unit. Now, step 4 and 5. Materials, 84,050. Conversion cost, 62,000 for conversion and for material. This is work in process, 7,550. Material, 84,050. Conversion cost, 62,000. The total, 153,600. The same as using weighted average at the cost we started with. That is material during the period, conversion cost during the period, and the work in process beginning. Total 153,600. What about the output cost? What about the out cost? I mean the cost of the 31,000 unit that is transferred to the next process. 1,000 from beginning and 30,000 from during. So now, from beginning inventory, this is the cost, 7,550. Shall we add any material for it or material cost? No, because it was 100% completed. So we need no cost regarding material, zero cost. But conversion cost, it was completed 60%. So we need for 40% only. That is 1,000 times 40%, that is the 400 we got here, 400. 400, zero for material, 400 for conversion. The 400 is multiplied or to be multiplied by 1975. That is the cost of conversion we got as cost per unit. Sorry, cost per unit regarding conversion cost, 1.975. We multiplied by 1975. The total cost of the 1,000 equal 8,340. We will not transfer only 1,000 units. We will transfer 31,000. So this is the cost of the 1,000 after completing it. Then I have 30,000 times the material cost times conversion cost, 131,250. The total 139,590. Till now, we completed the 31,000 that we will transfer to the next process. The 1,000 beginning and the 30,000 from the new units. The remaining is 5,000 ending work in process. How to calculate its cost like this? Work in process at N. I have material 5,000 times 2.4 and 5,000 times 20% completion rate. I mean 1,000 times 1.975 equal 13,975. If added together with the 139,590, it gives you the total as the beginning cost. Here, apply process costing methods to cases with transferred in costs. This is will be explained in the next Zoom lecture. After explaining it in the lecture, the live lecture, I mean the face-to-face lecture. I want to tell you that, please wait a moment. Excuse me. Just a moment. I'm searching for something for you. Okay. I will come to you again now. Just wait a moment. This is cost accounting systems. This is the examples on process costing. If you remember, we said that cost accounting systems, mainly there are two methods, process costing system and job order costing, that is long-term and short-term. Then we said that we are preparing equivalent units of production report, average cost per unit report, the process cost sheet, and the process ledger account. And I told you that the equivalent units of production report has a physical flow column. This physical flow column, in the PowerPoint we explained, he gave me the first step that we began with kaza plus so much equal the total. The direct material column, the same in the PowerPoint. But in the PowerPoint, I haven't direct wages column and manufacturing overhead columns, but he added them together in one column and told me conversion cost. As I added those two items in one column, also in the average cost are added in one column, but direct material is a separate column. Then when I calculated the cost, he added the cost like this in this column. I mean material, wages, and overhead total like this. But he didn't prepare the cost sheet or the cost report for the process by this manner. But I want you to prepare it like this. 5,000 times 34.5, 400 times 20, 200 times 15. This is the total. The output costs, completed units multiplied by material, labor, and indirect manufacturing cost. Ending work in process, 2,000 multiplied by material, labor, and overhead cost. Then I have the same total cost output and total cost regarding the input cost. I brought for you these slides, which we explained last Monday, to give you an idea about the difference between what I explained and the amalgamated columns and the undisclosure appeared in the slides regarding Horingram. That's why, please, when you are solving, try to solve using the live lecture method I explained to you, not this one, even though both are right. But when he added the two columns of direct wages and manufacturing overhead under one column, one heading called conversion cost, it is not wrong. But he did this to summarize the answer because he has the same completion rate for direct labor cost and for conversion cost. But if the conversion, the completion rate is different, he cannot amalgamate the two columns together, as I told you. Also, he didn't prepare the process ledger account as a ledger account, the process A ledger account, or the process in general ledger account, but we explained it on last Monday. So these are the input costs, and these are the cost of output, either that we produce and deliver to process B, or what is remained at end as work in process. We are going to explain exercise 2 next lecture, inshallah. But I may give you an idea about it now. He told me, referring to, I will explain it from its beginning quickly. He told me in a certain factory which has two processes A and B, and just beginning its activity, the following data were available relating to process A during the month of January 2017, and we are required to prepare each of equivalent units of production report, average cost per unit report, process A report, and process A ledger account. The data I have, the factory began producing 5,000 units, no work in process at beginning. The completed unit 3,000, as I began by 5,000 and the completed 3,000, so I have ending work in process 2,000. The completion rate for the units representing work in process, that is 2,000, at the end was 100% for material. Even if he didn't mention that it is 100%, I consider it 100%. 70% for wages, 60% for manufacturing overhead. Different completion rate for wages and for manufacturing overhead. That's why we did 2 columns, one for wages and one for manufacturing overhead. If I give you that the completion rate is 70% for both or 60% for both, and you fulfill one column, no problem. Actual costs incurred during January for process A equal 172,500, 88,000, 63,000. So I have materials 172,500, wages 88,000, overhead 63,000, that is indirect manufacturing cost. To prepare the equivalent units of production report, this is a physical flow. Direct material, direct wages, manufacturing overhead. Why we didn't amalgamate the 2 columns in 1 column? Because this completion rate 60% and this is 70%, or the opposite, 70% and 60%. The completed and transferred unit 3,000. So 3,000 physical flow, 3,000 in all items of cost, completed, 100%. The work in process end, 2,000 physical flow, 100% direct material, 2,000 direct material, 60% for direct wages, 2,000 times 60%, 70% direct wages, 70% times 2,000, 1,400, then 60% regarding manufacturing overhead, 2,000 times 60%, 1,200. Then this is the total equivalent units of production as we calculated. The average cost per unit, I told you the 3 columns of cost or the 3 columns of cost elements, I have the same 3 columns here. As you see here, the same 3 columns. Only what we haven't is the equivalent units of production report, the physical flow column. So direct material, this is direct material. Direct wages, this is direct wages. Manufacturing overhead, this is manufacturing overhead. The total cost, he told me that in the example like this, 172,500, 88,000, 63,000. These are the total cost. Divided by the equivalent units of production report cost units, 5,000 for 400 and for 200, he gives me the average cost per unit. Now, the average cost per unit, if multiplied by 5,000 for 400 for 200, gives the total cost. This is the in cost. These are from the equivalent units of production report, multiplied by the average cost per unit from its report, gives me the total cost of the period. And these are the 5,000. The completed 3,000 are 3,000 from the point of view of material, wages, and overhead, multiplied by the average cost per unit, gives the total cost of the 3,000. Work in process and the 2,000. 2,000 completely from the material point of view times average cost of material. 1,400 regarding wages times 20 cost per equivalent units regarding the wages. 1,200 as 60% of 2,000 regarding manufacturing overhead, multiplied with the average cost per unit of the equivalent unit regarding indirect manufacturing cost. And this is the total cost, as I told you. Now, this is the process ledger account. All these 3 items are in the debit, and the total of 208 and 115 in the credit. 208, 115, and this is the grand total. Here, material, wages, and manufacturing overhead, the total of debit equal the total of credit. Why he told me balance that, and this is the balance of work in process. So this is process A account. It has a balance at end, work in process end, 115,000. That is the 2,000 units ending work in process. But process B is debited, and the process A is a credit to process B by what is transferred to process B, 208,500. Now, referring to exercise 1 or example 1, the following data relate to process B, and you are required to fulfill the same requirements for B. That is equivalent units of production report, then average cost per unit report, the cost report or cost sheet, then the account, the ledger account. The completed units that are transferred to store 2,500. Now I told you that B received 3,000 units from A. 3,000 units completed and transferred. So 3,000 units are transferred to B. The 3,000 units I completed in B 2,400. So remains at end 600 units. Work in process 600 units. The completion rate of the remaining units, that is the 600, the ending work in process, 50% and 40% for wages and overhead cost respectively. So I have one column for direct material, two columns for wages and overhead. If these completion rates are the same regarding wages and overhead, I may make one column just as the slides we saw in Horingron slides. Actual cost for the two mentioned items, I mean wages and overhead, so much and so much. Where is the cost of material? Cost of material is the 208,500 of the 3,000 units transferred as completed units from process A point of view, and we consider material for process B. Now, the 3,000 of process B, the completed 2,400. So 2,400 for all the items. The remained work in process 600 without telling me material 100%. So 600. And he told me 50% and 40% for wages and overhead. 40% and 50%. 50% for wages, so 600 times 50% gives 300. 600 times 40% gives 240. So the 600 units of ending work in process multiplied by 50% regarding wages multiplied by 40% regarding overhead, this is the equivalent units. These two items cost he gave me in the example. Yes, in the previous slide. This is wages and overhead. He didn't give you material because material you have as transferred from process A to 08,500. 208,500. These items of cost divided by the equivalent units of production report gives the cost per unit. Now, as I told you, you multiply the 69.5 and the 20.5 and the 10 by the equivalent units in the row before to get this cost in the first beginning of the cost sheet. These are the equivalent units times the average cost per unit gives you the total cost of the period. Even though the ending work in process, the total cost. These total costs are subdivided into two items, completed and work in process at end. The completed 2,400, so 2,400 and the three kinds of cost times the average cost per unit, the same average cost as you see, to get 240. These are the cost of the completed unit, the 2,400 that will go to store. Then the 600 work in process, from the material point of view, 600, 50% out of it regarding wages, 40% regarding overhead, times the average cost per unit to give you this cost of the work in process. 240 and 50,250 will be in the credit side of the account. This is balance at end, and this is to the finished product control account that is to the stores. And the items of cost here from process A, the cost that we considered material, and the wages and manufacturing overhead, he told me, or he gave me as data in the example. Thank you very much. We will explain this example second time in the live lecture, and see you inshallah on next Monday. I will see afterwards in the managerial accounting Zoom lecture. Thank you very much.